everybody, and welcome to Vintage Markets Inside the Charts. My name is Tamar Mehr from Trade with Precision. And what a week we had last week in the market. So big moves on many asset classes, and I want to start here with US equity, and this is the chart of the S&P on the daily. And what we can see here, we broke very strongly around this area of resistance in and around the 58.80 level. We broke and we reached the psychological level and an all-time high of 6,000. So currently we are a bit overextended, meaning there's quite a distance between where price action sits right now and its moving averages, but we do have the moving averages 10, 20, 50 all fanning, all in the correct order for an uptrend. So in this case, I'm looking for a bit of release of this very strong buying pressure and a retest in and around that 59,000 area. Now, if we'll take a quick look here on the weekly chart, we can see the strong uptrend that we've got here, still again overextended. So I'd love to see a bit of a pullback into this level. Here again, moving averages 10, 20, 50, all fanning, all in the correct order for an uptrend. Next, I want to take a look at the small cap, so on the Russell 2000. And here on the weekly chart, we can see after many weeks of not going anywhere, basically stuck here in a sideways, we broke strongly higher above this 2300 level. We can also see here moving averages on the weekly chart 10, 20, 50, all fanning, all in the correct order for an uptrend. Now, in the case of the Russell, we haven't yet made an all-time high. So if we'll take a look here on the monthly chart, we can see the spike here and the rejection that we have and a pushed lower. So we could find this area around the 2450 as potential resistance area. So once again, in this case, I'm looking for a bit of release of this very strong buying pressure and a retest of this 2300. So the strong movement on the US market is with expectation that the new president will have more deregulation, tax cut that will benefit corporations, including the small caps. Now, another big mover in the market was the US dollar. And another big event that we had in the market was that the Fed cut their interest rate by 0.25%. But that didn't see a weakening US dollar. We actually still seen a strong US dollar, and that is because the market is expecting that new policy, potential tariffs, will see a strengthening of the US dollar. As the market is currently viewing the tariffs and the tax cut as inflationary measures that could force the Fed to go back and increase their interest rate. So what we can see here on the monthly chart on euro dollar is that we are back into the swing low. So this is the low that we've printed during 2024 around April. A break of this area could see the market traveling toward that 1.05. Now this is quite a significant level on this market. We can see we were stuck here in a range between the 1.05 and the 1.12. A break of this 1.05 could see the market trading toward parity. A quick look at the weekly chart, and we can see the strong push all the way up from the 1.12 toward that 1.0650. So currently we're a little bit overextended, and what I'm looking for is a bounce off this level. We can see we bounce off that area many times in the past, so I'd like to see a bit more of a pullback, potentially toward that 1.08, and then another touch above this level. Basically, I'm looking for a bit more compressions of price above this level before looking for a potential break. Now, another market that had a significant move during this week and was actually pulling back after many weeks of bullish push is gold. So this is the weekly chart, and as we can see, the weekly chart has been going strong and printing all-time highs. Now, with the strength of the US dollar last week, we saw a pullback in the price of gold. So currently, we're just touching the 10 moving averages. We're still in a beautiful uptrend. We pull back a little bit, but I'm actually looking for a deeper pullback in the context of the weekly, potentially in and around that 2600. So back into the averages, into the area between the 10 and the 20 moving averages. Now, if we'll take a look here on the monthly, we can see how strong overextension we've got on the monthly chart. So I want to see a bit more of release of this buying pressure and get closer into the averages on the higher time frame as well. Happy trading, everyone. Bye for now.